stochastic oscillator. The stochastic oscillator will tell us exactly if the MACD reverse from the overbought or the oversold. Accordingly, by the combination of these two indicators, we can reach like up to 85% reliability of the signals generated out of these two indicators. Simple? See? Well, so the first signal we can generate of the MACD is the crossover signal. First one. Well, the second one is the double, we call it all so named double crossover. What does it mean by the double crossover? That's what we see right now. The double crossover, that's when the crossover comes very close to the zero line. Meaning what? Meaning it's the same crossover but not from the extreme. It is a crossover, but when the crossover comes from any other area but not from the extreme, it will need confirmation, and the confirmation comes from the second crossover, not from the first crossover. For example, this is a crossover, simple crossover, as you see, to sell, and it's not from the extreme. It's kind of corrections or kind of sideways. Accordingly, you need the second confirmation. This is your setup. This is your signal. The second crossover, not the first crossover. So the second crossover is quite reliable to sell as well if you're not coming from the extreme. If you're coming from the near to the zero line, it's kind of like correction or consolidation and waiting for a breakout. Like exactly this. If you're looking at this price action, this kind of consolidation or correction, then the breakouts happen, and so on. You know, this is the second signal could be generated from the MACD indicator. The third one, or the third signals we can generate, is the buy and test signal. Or we call it either the buy and sell and test. Buy and test or sell and test signals. What does it mean by buy and test and sell and test signal? It's also common when you have a trend line, keep going trend line, and we need to add position during the trend. For example, you get a MACD signal here and you buy at this point. Well, and you're already going over there. This is the signal line and this is MACD line. And the MACD line go upward and then test the signal line and going upward. This is a signal to add position. And it is confirmed also, as you see, the price action reflecting this quite well. For each, the same will be this is when we have a buy setup. The same could be applied in the sell setup. You have already a sell setup here and you are in a downtrend, so we need to add position. You can get confirmation by the sell and test. You already sold here and you wait for the signal line, you wait for the MACD line to test, MACD line to test the signal line and then keep to the downward. And this is from here. So this is the adding position. So the buy and test or sell and test could be used to add more positions and for the risk, for the money management, add your position for the money management, and which quite useful and tested as well. The fourth signal we can generate from the MACD is the Joe behavior. What does it mean by Joe? Joe, what we call crocodile. When you have in the mouth of the crocodile, we call it Joe. Joe. So how it works and what does it mean and what does it mean and what's the psychology behind it? The Joe, let me show you first by explain it to you first because it needs it. The Joe, when both the signal line, let me just change the color, yes. When both the MACD line and the signal line moving together next to each other, like sticking together for a while, and then get the breakout. This breakout is called Joe because it looks like the crocodile Joe, and a very strong signal by testing as well. The most reliable one when we did this consolidation or this is sticking between the two lines being close to the zero line. However, it's not, even if it's not of this sticking between the two lines, not very close to the zero line, it's also reliable signals to buy or sell. Let me show you one real example on this. Yes, this for example, the US CAD, we can have a look on US CAD. Forget about these lines now. Yes, this for example. One real example of Joe. Both the signal line and MACD line moving together, sticking to each other for a while, and then the breakout happens. Perpendicularly. See? And so on. The same. Every time, each single time you see such a sticking between the two moving up, between the two lines, especially when being close, the closer to the zero line, the stronger the signal. You have you would expect a breakout, either upward or downward, depends on your analysis and depends on the direction of the trend. The very strong signal as well. Any questions so far? Good. Let's keep going. By now, just to sum up, we've got three. We got the concepts and calculation of MACD. We got the trade signals of MACD. We need to know how to use MACD itself, the usage of MACD. Is only the signals we can generate from MACD? No. MACD have two major usage, frankly speaking. The first one, it gives us the trade setup, either the divergence, through divergence, either a negative divergence or positive divergence. What the concept of divergence? Divergence means the incompliance or the difference between the price movements and the indicator movements. For example, if the price action gave us higher highs, higher lows, you are on an uptrend, right? No question on that. But what if the indicator or MACD line gave us the opposite direction, give us lower highs, lower lows to the downside? And this is a momentum indicator. This is what we call divergence. Divergence when the prices give us certain direction through lows and highs, and the momentum indicator give us an opposite directions through opposite highs and lows as well. If the direction of the indicators to the downside and the price upside, we call it negative divergence. If the indicator give us a positive size signals to the upward and the price to the downward, we call it positive divergence. And very strong one, by the way. I have some people only working for divergence, and they have portfolio of tens of thousands of dollars and they make hell of money only because of they know how to use divergence quite well. They understand the concepts and the psychology of divergence. They just apply, just working and just trading based on the divergence setup. That's it. The second signal we can get out of the usage of MACD is the confirmation of the trend. What do you mean by the confirmation of the trend? As we're just discussing, that the MACD line can tell us the direction of the trend, either an uptrend or downtrend. When we're up in the zero line, we're in uptrend, and when we're below the zero line, we're in a downtrend, right? Right. It also gives us confirmation on the direction of the price movement. Meaning what? Meaning, let me say it crystal clear. What we're telling you here, we're telling all the signals we're getting and all the price, all the signals and the trade setup we're getting is not from any other indicators, either from MACD. MACD helps us to confirm our trade setup, to confirm the price movements, to confirm the price action. But in the end, all our trades based on purely the price behavior, only price behavior. But because of the MACD or any other momentum indicator can give us heads up on if there is a weakness or a strength on the trend, so we can use it through divergence, as I told you. If you jump into a trade and you need confirmation in the trade, you are in the right direction of the trend, you are in the right direction of the trade, and the trade needs to go immediately, get a confirmation from MACD. But in the end, it's all based on the price action, or either MACD or another indicator, it's just adding up to the price action, to the price behavior. Understand? Clear? This sheet needs to be crystal clear. And even in a MACD or any other indicator to give us reliable and high probability trade, still the price action is the master, because it's the raw data. It's the one that reflects the market psychology. It's the one that reflects the market behavior, the crowd psychology. It's the smart money, how the smart money plays out, and how the buyers and sellers interact together, with the pull and pair interact together, and which one gonna overcome the others. All of this comes from the price behavior, from the price action, not from the indicator. Okay? Great. Very good one. Let's keep going. Any questions so far? Well, the last thing actually I want to go through with you is the live example. Let me open some charts here, and if any one of you wants to analyze certain charts or any of these charts, just let me know. Just give me a comment right now. We'll go through it immediately live and analyze it to you through MACD indicator, and we'll see how can we generate and monitor signals, buy and sell setup, signals, divergence, all of what we get in these tutorials live from MACD right now. So I'll go through one of the common charts now. First, I want to show you, frankly, some of the divergence, because the most important thing I know, yes, this one, for example. It's quite obvious. Just open any chart, you will see it crystal clear. If you can read chart, if you can read price actions, if you can understand how the MACD indicator work, simple. You are in another area. You are in the fly. You can make a hell of money in a simple, without any complication and without staring your eyes in the monitor 24 hours a day. So, in the simplest way, price action give us a higher high, and the momentum indicator give us a lower high. Means what? Means this the price will turn down. Simple? Simple, right? Is this all? No, it's not all thing. Because the most reliable signal is to get the divergence followed by crossover, which is the sell signal. So the divergence itself is the setup, but the crossover is the trigger of this setup. You know what I mean? So you have divergence, you have negative divergence here. Why negative divergence? Because the price give us higher highs, however the momentum indicator give us lower highs, so this is a divergence, this is a weakness in the momentum, and we expect a reverse or at least kind of correction at that level. Right? Right. Then you'll see the price action break, sorry, because yes, price action break this one, breaks this trend line, right? This is a price action, but because of the indicator, it's a leading indicator, as we said before, is a leading indicator. It gives a heads up if the price gonna move down or move up. First, the setup is the divergence. Second, the trigger, which is the selling crossover. Let me magnify this a little bit so you can see the crossover. This is the crossover. This is the sell signal. See? So you get the setup first and gives you the signal. The target of these movements is something else. Could be generated, could be determined via any other tools, could be determined classically, could be determined through the Fibonacci ratios, could be determined any other tools. But the most important thing that you have an assurance up to 85 to 90% this will be fallen down. Even before this fallen down. Let me show you how many bips we're gonna get from here, from this indicator, from this movement, sorry. How many bips? 180, about 180 bips, right? At the minimal, 180 bip. We would expect, as per our analysis, to get 280 bip out of this move. And this only in one chart, in one movement. Let me show you some other examples. This jaw, also apart from the jaw, I want to show you something here. Because even for the jaw, forget about the lines, because it's a different way of making chart analysis. This one, for example, let me get the 1 hour. chart. In a 1 hour chart, crystal clear that the price witness lower lows, lower highs, right? So we're in a downtrend in the price. However, the indicator gave us the opposite, higher lows. Means what? Means this will be going up. And this is at least you're getting 150 in 2 days in only one trade movement. See? In only using the concepts of divergence. Only the concepts of divergence. And any chart and history repeat itself. Any kind of divergence, I'll show you many charts. Any chart you use, I can extract many signals. I can show you many signals we can get from many reliable and successful signals out of MACD. This, for example, we're in a 4 hour time frame, any chart. The indicator gave us the same high, however, the price witnessed higher high. And this confirmed by the price action as well. Means what? Means this structure is this beautiful structure, frankly speaking. Honestly, this is a very beautiful structure we use in the structural analysis. Sometimes we'll discuss this in different videos, in another videos we will give in shortly about the structure and the wave analysis, because this is quite interesting. If you have an impulse wave and they get a correction, you would expect another impulse wave. But what's happening here, sorry, is something else, something apart from the MACD, but quite interesting and quite beautiful. You need to know about it. This is impulse wave, and this is a correction wave. This is out of question. So by all means, you would expect another impulse wave. But what happens here? What happens here is the price move after the breakout moves correctively, gives us an indication that another impulse move up before it goes down to take the low. So you're having kind of A, B, C corrective structure before the impulse going down. See, this is kind of structural analysis. This is a separate course and a separate tutorial. We're gonna give it to you later. This is quite interesting and quite beautiful. It's something quite smart and enable you to identify and monitor the price movement crystal cleared even without indicators. Okay? Any other questions so far? Yes, if you have question, just if the question belongs to the MACD line, just say it now. If it's belong to any other topic apart from the MACD, apart from this lecture, from the webinar, just drop your comment below the video and we'll get back to you in the next session, or our team will get back to you straightforward. Good. Let's have a look on some of the commodities as well. Beautiful. Look. Like exactly tells what we say. The price, this is the gold, by the way. This is the gold chart on the 4 hours. The gold chart on the 4 hours gave witness. The price actions gives us a higher highs. However, the momentum indicators give us a lower highs. This is a setup. And what's the signal? The crossover to sell. The crossover to sell. So selling from here. Your target? Your target could be identified by either FIBO or the previous low classically, or any other tools. We'll have another session, another video as well to determine your target. How to get your target quite reliably. See? Simple at that. Using the divergence. If you understand how it works. If you understand something, you will be able to manage it quite well. Silver, almost the same. Look, beautiful movement. The price witnessed higher highs and the indicator witnessed lower highs. So it should be falling down. See, and this is your signal. And because it's close, as we just mentioned, because it's close to the zero line, it's not from the extreme, so you need to rely on the second or the third, the second crossover, not the first one. This is a sell, this is a sell, successful one, and this is a sell, this is a sell as well, another sell. Let me show you right now. This is the second, look, this is a second crossover, right? This is a sell, which is a sell from here. And this is another sell, which is a sell from here. And if you get a third sell, this is sell and test. If you get something like that, add position to the sell. If you get a correction here, sell. See? Quite simple and straightforward. Okay guys, thank you very much for joining us today. It was really interesting to tell you some of the insights of how to use the MACD indicator. It's really interesting because it's quite popular, reliable, and we have many trading strategies combined, relying deeply on the MACD line in conjunction with many other indicators. But remember, the price action is master. Price action is the most important thing. All the other indicators is just telling us, giving us extra confirmations on the directions, giving us the sell and buy setup. Enjoy trading and enjoy making money. If you have any question, don't hesitate to contact us direct, and our team will get back to you straightforward. Thank you very much for joining us. Please do subscribe in the channel to get all the tutorials and all the educational video having from FX Hub Academy. Thanks once again. See you next time. Bye-bye.